Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Tuesday, the 5th of March. Starting off with the FTSE 100, which looks characteristically dull at the moment. Here you can see that we've broken back below the 50-day moving average, which is now falling, which is obviously not great. That's around 76.30. Below that, we've got the potential of hitting the 200-day line, 75.40, although hopefully at this stage we won't see worse than that. The worst case scenario at the moment will be to go down to the floor of that rising August trend channel at 74.70 sometime during the course of March. This stage only clear a push through the 7700 level, the initial March resistance, really opening up the prospect of a move to 78.30 and the top of that channel, but basically a market that's going nowhere fast. A bit like the economy, of course. Going on to the DAX, and here we've retreated from the September resistance line there, 17,700. That was a previous target. We're looking for an end of day close above that now to open up the prospect of moving to 18,400 and the top of that rising October trend channel. In terms of the downside, the old February resistance around 17,400, the first area, and then the floor of the channel, 17,200 potential support zones. Moving on to the Dow, where it's been about trying to hold within that rising trend channel from back in October. The fact that we're still in there after so many months is clearly miraculous. That the line there currently around 38,800. We break back below that, then it's the 50-day line and 38,000, which would be the targets. In terms of the upside, possibly up to 41,000 by the end of next month if we manage to break through the recent 39,200 plus area of resistance, but at the moment that feels like it's quite a long way away. Moving on to Bitcoin, which just had sort of a whiff of the all-time highs near 69,000 this week. We just missed that line of resistance there, heading for 70,500, which was basically our new end of March target. In terms of the downside, probably we'll have to allow for at least down to 63 to 64,000, which was the initial resistance for this market right at the turn of the month. Worst case at this stage is that we go back down to the initial March support around 60,000. Moving on to gold, which I managed to forget yesterday, even though it was heading towards a record close. Here you can see that there's a rising trend channel in place since March last year. Top of the channel there heading for 2180, and we're looking at that the longer that we stay above the old December resistance at 2100, so that market actually now exceeding our expectations. Moving on to the stocks, and the first one is Active Energy, which is a requested stock, and here you can see that interesting chart situation, gapping down back in January, gapping down again last month, and then gapping up today. So that's a double bear trap island reversal. So first island reversal, obviously the bigger pattern, then the second mini one. And today the view is that while we're above recent neckline resistance at 0.44, we could head up to a penny, and basically that's the area of the 50-day moving average and the top of that broadening triangle from the end of January. So an interesting setup there, especially while we can remain above 0.44. On to Empire Metals, which has redeemed itself with the latest news RNS today. Here we've had a bear trap gap reversal and just nudging the 50-day line at currently around 10.5 pence. End of day close above 10.5. We'll be looking for 14 pence as soon as the end of this month after that bear trap rebound so that we've been treated to. Moving on to feedback, which I covered a few days ago, and unbelievably the shares are still looking hot. In fact, we managed to hit the top of that broadening triangle from August yesterday at £1.11, and hopefully we'll have a retest of that, especially while we remain above 91 pence, which was resistance on the way down. But good to see the shares actually hitting an upside target there for once in a long time. Moving on to Harland and Wolff, which is also covering itself in glory at the moment. Bear trap gap reversal from below the October support at 10.7 pence. The longer we stay above that, the greater the chance of a move up to 15 pence by the end of this month. If you're fussy, you'd wait for an end of day close through or above the 50-day line and that November resistance line, 11.25 pence, before assuming 15 pence or so was on its way. later in March. Onto Hornby, which I've probably looked at more than the other stock here, which is rather strange, but here we've had the test for support towards 30 pence. It was said before that while we're above 30, looking for 36 and then 46, and that's still on track, especially if we have an end of day close above 36 pence today, looking for 46 pence sometime later this month while we're above 30 pence, which was resistance on the way down. Moving on to Intertek, which comes to mind as a situation which would be part of the latest trend of companies being taken out by foreign rivals. Here we've gapped up through the resistance and above the top of that rising trend channel from October at £48.20, looking for up to £52.50 with or without any M&A action. Next up is a slightly smaller company, at least for now, which is Kodal Minerals, and here you can see the shares gingerly breaking that December resistance line. We're above, and we've been consolidating above a now rising 50-day moving average. I call that a sideways shuffle, and above 0.34 and that 50-day line, looking for initially up to 0.49 and the 200-day line. Best case up to 0.56 by the end of this month, while the 50-day line holds. Onto a stock which I haven't looked at before, the delicious sounding Tortilla Mexican grill. Here we've had a V-shaped bull flag breakout through the 51 or 51.5 pence level. We've got a curving 50-day moving average as well, so that suggests that we've got some gas in the tank. We're going to move up to the top of that broadening November triangle at 73 pence during the course of March. Ideally, we stay on the right side of 50 pence. Onto Panthera, and here, apart from the prospects of a big win in India, we've got the 50 and 200-day lines both rising. We're on a resistance line there from October, around 7.4 pence. Above that, on an end-of-day close basis, looking for quite a direct move up to September resistance at 11 pence plus, sometime during the course of March. Onto Pensana, which I interviewed the other week, and it seems to have rebounded from that experience. Here you can see that nice consolidation above a rising 50-day line. We haven't been back below the 50-day line since the end of January, and we're probably about just a few days away, maybe even by the end of this week, from a golden cross buy signal. The run up to a buy signal tends to be the strongest part in the cycle, so we're waiting for some of that magic, and the view here is that the longer we stay above the 200-day line at 27 pence, the greater the chance of a move to 45 pence later this month. One of the stars of Aquis, and obviously there are not that many at the moment, is Phoenix Digital Assets. Here you can see that we're fast approaching our initial target here, 4.1 pence, which hopefully will be the next week or so. Best case scenario target now upgraded to 5.8 pence and a early 2021 resistance line projection. Upside value while we hold above that 50-day line, currently around the 3 pence level. Moving on to Reach, and here you can see that we've had a bear trap gap reversal from below the initial February support there at 59 pence. Above that, we're looking for the top of the range, recent range, as high as December resistance at 75 pence over the next few sessions. Could be better than that, but at this stage, probably don't want to get too excited, just in case. 77 pence is the top of that triangle there from November, so if you're a fan of the shares, that is what you're looking for at the moment, especially while we remain above the 50-day line at 65 pence. Finishing off with Vast, which has always let down the bulls, at least until now, and why should this time be any different? But we're looking at it anyway. Here we need to break that 50-day line, 0.6 pence above that. There's a possibility of 0.8 pence plus by the end of next month, but obviously in the recent past, any strength here has always been sold into, so maybe the 50-day line or an end-of-day close above that would be the initial trigger. Otherwise, we'd assume that the best has already been done here. The other point to note, though, is that we've had a gap close buy signal yesterday, so above 0.37, we are in theory on the front foot for Vast. That's it for me today. More updates tomorrow.